Hi, my students. Hi, my YouTubers, my fellow subscribers. Guys, let's get that distinction. That's what I'm going to say this year. Guys, let's get the distinction. It's doable. Now, I just want us to do the IEB question paper for 2020. We're focusing on the cash flow from financing activities. So, guys, remember, I'm just only going to do 2020, 2021 in each segment I want you to focus on. For any years below that, if you're struggling, my contact details, it's Moyo Patiswa P with an H and T with an H. And so it's moyopatiswa@gmail.com. And then my cell is 081-833-9231. So, guys, I just want us to look into this question paper. So remember, I'm not the examiner at the IB yet, or the examiner at the Government Department of Education yet. I wish I'd like to, but I did not develop these question papers. They're not part of my own work. I do not own any patents on these question papers or copyrights rather. So guys, please, please, please note that this is a resource available for everyone who cares to check the matric past papers and who cares to check the IEB and the government past papers. Yeah, enough with the disclaimers. Let's jump into business. So this was 2020, November 2020. Was it November? November 2020. So remember, we're looking at the cash flow statement, guys. Very important. Your client name. Which accountant has ever took books without knowing who is their client? Yeah. Let's see the financial year end. Oh, guys, 29 February. Why do they like Feb, ne? Okay, so now I want you to do cash flow from financing activities. Now let's see if there is a story around shares. Ne? If you're looking at the comparative figures we're given, 2019 you had 4.5 million shares. 2020 you had 5.8 million shares. So obviously there was a share issue. Let's hear the story here. It says there were 450,000 ordinary shares in issue on 28 February 2019. New shares, this is the opening balance. New shares were issued on 1st November at a price of 18 Rand per share. Directors paid a dividend, the final dividend. Yeah. Now they didn't tell us the number. Are you not worried? You're not worried, ne? Not worried at all. We need to solve for X. So this is the number of shares you had at the beginning. Okay. Let's do our calculations. It's 450 ordinary shares at the beginning of the year. And how much? We're given the figure, guys. This is the ordinary shares at the end. At 450. They just told us that there were new shares issued at 18 rands. So there was no share repurchase. We can delete that. So we need to get this. And I swapped these around. Apologies about that. I swapped these around. Apologies. It's not making sense. Okay. So for Exxon Solvegi, we don't know how many were issued. But we know that there were shares issued. So guys, X is very reliable. X equals to 850 which is 5850 4.5 which is 1,350,000. So the shares issued here, it's 1,350,000, guys. Add those together, they give you this. So they are issued at 18 rand. So now we need to find the number of shares. So we've got known variables that we can use to find the unknown variable. So now this is divide by gives you 75,000 shares. Now, which means the shares that were issued equals to 25 shares so the shares repurchased, which is the flow. Guys, shares issued, which is the inflow. There was no repurchase, which is the outflow. Proceeds from a new loan. Guys, the draw by now. The bond payment. Okay, the loan was negotiated. Let me be slow. 2019, guys, we didn't have a long-term loan. 2020, we had a long-term loan. They don't tell us the mortgage point 2019. They tell us the balance at the end. Ne? Now let's go to the notes. They're saying the loan was negotiated. The interest, so Spears also increased their mortgage bond. Said the bond repayment of 60,000 was made monthly. Ne? So 60,000. So this is an outflow. It's 720. Show your calculations, guys. Method marks. Method marks. I cannot stress it now. So proceeds from a new loan we already have, which is 100,000. Need to find the mortgage bond at the beginning, guys. Ashram X is always there to help me. Wow, this is very interesting. We are given we're not given the opening balance, but we're given the debt to equity ratio, which is your gearing ratio. Now your gearing ratio is this. The gearing ratio is debt divided by your equity. Ne? So here, your gearing ratio you are given is 60%. 0.6 is 60%, guys. So 0.6 equals to, they gave you equity. Okay, guys, your equity is here. Plus equals to This is what we're given. That our gearing ratio equals to, therefore, x equals to okay. So now we have our opening balance. We can solve for x now, finding out the increase on the line. Equals to this. Three. 0.3 plus, how much did we pay back, guys? 720. So the bond is 300,000. That is the proceed. So you add it to the 100,000. Meaning we have 400,000. An inflow. An inflow. I hope I subtracted what I needed to subtract. Guys, let's check the memo. Let's check the memo. And 350. Guys, there you have your 7 marks. It's 7 marks plus the mortgage bond calculation. You don't need to do the account, guys. The exchange solves many problems. Okay. So guys, I hope this makes sense. Like, subscribe, share, do the wonderful things that need to be done, guys. Goodbye.